In today's video, I'm going to be telling you exactly how to become a millionaire for just $10 a day. Think about it. You could either buy 2 coffees at Starbucks every day, or you can make that coffee at home and use those $10 to become a millionaire. Hey everyone, it's Prashant here. Welcome to my YouTube channel and thank you for joining me in today's video where I'm going to be telling you how to become a millionaire for just $10 a day. Let's dive in. I know what you're thinking. Why do guys on YouTube always tell you to give up on that delicious Starbucks? Well, the truth is it doesn't matter if it's Starbucks or something else. What's important is the concept behind this, which is reducing your spending and living below your means. I'm certain that each and every one of you watching this video can do something in your life in order to reduce your spending. In fact, I made a video a few weeks ago about 5 ways in which you can reduce your spending. I'm going to go ahead and link that video in the description below and put it up here. Please be sure to watch it after this video. If you save and invest just $10 a day or $300 a month into the stock market, in 41 years, you will be a millionaire. This is especially powerful if you're young. For example, if you start investing at the age of 19 at just $10 a day, by the age of 60, you'll be a millionaire. To add to this, you would have contributed only $150,000 of your own money into this portfolio. The rest of the money in this portfolio will come from your gains in the stock market to the tune of over $900,000. Guys, before I continue with this video, I want to take a moment to ask you to hit that like button and that subscribe button and share this video with somebody who you think will find this content useful. This helps me out a lot with the YouTube algorithm and motivates me to keep making these videos. That being said, let's get back to our video. You might be thinking, there is no savings account in the world that will pay $900,000 in interest. And you'll be right. The only way to gain this kind of money in interest or in capital gains is by investing your money in the stock market. Now, luckily, investing in the stock market for the long term is not difficult. It is not day trading, it is not options trading, it is not buying meme stocks like GameStop and trying to ride a short squeeze. In fact, it is extremely simple. All you have to do is buy in consistently in a well-diversified index fund portfolio and ride that over time to millionaire status. Today, I'm going to tell you exactly step by step what you can do to become a millionaire over time. Step number 1, open a Roth IRA account. As long as your earned income in 2021 is less than $140,000 for single filers and $208,000 for married filers, you can and should open a Roth IRA account. You can do this with any brokerage firm like Vanguard, Fidelity, or Charles Schwab. In fact, I'm going to post a few links down in the description and you're welcome. Step 2, save consistently. Go ahead and put at least $10 per day into this account. If you have to reduce your spending by cutting back on the Starbucks or maybe not pressing the buy now button on Amazon, do it. In fact, you can save up to $6,000 for the year 2021 in this account, coming out to be $16.43 per day. Step 3, invest in well-diversified index funds. Use a good mix of domestic and international stocks as well as government bonds. Examples of domestic index fund ETFs are VOO, the Vanguard's S&P 500 index fund, and VTI, Vanguard's Total Stock Market Index Fund. Examples of international stock index funds are VEA, Vanguard's Developed Markets Index Funds, and VXUS, Vanguard's Total International Market Index Fund. Example of government bonds ETF are VGIT, Vanguard's Intermediate Term Treasury ETF, and VGLT, Vanguard's Long-Term Treasuries ETF. You need to decide how much stocks and bonds you want to own based on what is your risk tolerance and what are the kind of returns you're looking for. For example, if you have a very high risk tolerance, you could go 90% stock and 10% bonds, all the way to 50% stocks and 50% bonds if you have a lower risk tolerance. Step 4, buy more. This is the most important step when it comes to long-term investing. You should buy when stocks are high and you should buy when stocks are low. This means that you should not let the price of the stocks that you're buying dictate what your strategy is. You should decide your strategy up front, and once you have decided, you need to stick to that strategy no matter what. Stock prices will go up and down over time, and nobody can predict why they will do this. This means that if you've been buying consistently every week or every month, over time, you will come out ahead. On average, the stock market has always gone up when considering a long time period, and the S&P 500 has provided an average of 8% annual returns. While past performance is not a guarantee of future performance, I think it is safe to expect similar returns from the S&P 500 when considering the long term. Step number 5, hold your investments. Once you have bought your investments, it is time to hold on to them indefinitely, or at least till you need them in retirement. Remember, time in the market is much better than timing the market. Because nobody can predict what the stock market is going to do, it is in your best interest to hold your investments through all the ups and downs, at least until you need the money in retirement. Over a long time frame, the stock market tends to go up, so it is only logical to expect that your investments will also go up over time. However, if you're trying to time the market by buying low and selling high, you will either get sidelined as the market rises because you're waiting for it to drop to buy in, or you would buy at the highest point and sell at the bottom because you're scared of what's going on and then lock in your losses. The year 2020 gave us a huge lesson in this. In March of 2020, the S&P 500 dropped more than 30% over a course of few days. However, by August of 2020, it was back to its previous levels and has since continued to climb upward. If you sold your investments at the bottom of the market in March 2020, you would have locked in your losses and missed all the gains as the market recovered and even surpassed its previous highs. Step 6. Become a millionaire. Over a long time period, it is possible to save and invest your way into millionaire status. Going back to our example from the start of the video, if you were saving and investing just $10 a day at an average rate of return of 8%, over a period of 41 years, you would have in excess of $1 million. If you're saving and investing $16.43 a day as allowed by the IRS for the year of 2021, then over a time period of 41 years, you would have $1.7 million. Step 7. Withdraw your money in retirement, tax-free. That's right. Did I mention that withdrawals in retirement from a Roth IRA are tax-free? 100% tax-free. No federal income tax, no capital gains tax, no Medicare, no Social Security tax. That's it. Enjoy your money. So to sum up, you guys, I want to reiterate, how to become a millionaire is not a secret. There is no secret sauce. What it takes is discipline and consistency. If you can save as little as $10 a day and invest it in a wise and disciplined manner, you can become a millionaire. And if you can save more than that money and invest it, you can become a millionaire that much faster. It's time to take control of your personal finances and start your journey to financial literacy and freedom. That's all I have for you guys in today's video. If you like this video, please go ahead and hit that thumbs up button and that subscribe button. If you dislike the video, please go ahead and hit that like button and that subscribe button as well. Go ahead and hit the bell icon so that you're notified instantly when I post a new video. I post at least one video every week with great new financial content, and I'd love to see you there. Also, go ahead and follow me on Instagram and Twitter. I'll be leaving the handles in the description down below. Thank you so much for watching, and see you next time.